I mean, the shilling, although slap bang 91 shillings, it's still under a lot of pressure.
Lovely to be here, Lerato. Yes, the shilling is indeed still under a lot of pressure. What's really happening is that the fundamentals of the Kenyan economy are now under question, in that we're seeing the high inflation sustained and the currency, foreign hard currency, really being demanded by the energy players and all sorts of players across the board. So the shilling once again under pressure.
I mean, what do you make of the CBK's decision to keep the interest rates at 6.25%? I mean, this would give some support to the shilling if monetary policy was just tighter.
Well, the central bank is of the opinion that 6.25 is tight enough, and that lowering that rate would have actually been an adverse move. However, my opinion is that because of the very high inflation rate, then it's better to hold for some duration. I think they might have to tighten it a bit more, but for now, I think the holding move was well advised.
Okay, what do you make of trends in the market this week? I mean, financials really in many ways driving the NSE for the week, but I think many investors had priced in the successes of KCB because it hasn't really boosted the stock.
That's right. The expectations really now are kind of at par with the performance. KCB, not much movement. Equity Bank, not too much of a movement after the results. Housing Finance, also, there wasn't too much of a movement. Now the expectations now are shifting to the other players. Next week we expect Barclays Bank, and soon after perhaps Cooperative Bank will release their results next week. So the expectation really has already been priced in. Now the bigger move away from that, the banking sector, is that the question out there in the market is, will the fantastic performance we've been seeing from the bigger players in the banking industry percolate down to across other sectors of the economy and down to the local people on the street? That's the big question on every investor's mind.
Okay, let's talk about investors who are wanting to buy banking stocks. There have been concerns for the longest time, for instance, that some of the blue chip banks, the KCBs, the equities, for instance, have very high PEs, for instance. And, you know, even if the fundamentals are strong and the growth outlook for the companies are great, it just doesn't justify the prices that we're seeing in the sector, particularly now compounded by the fact that the market is just subdued in general and investors are looking for bargains. So how do they play the banking stocks?
Well, the banking stocks, to be honest, right now are beginning to look particularly tricky. Several months ago, a lot of analysts and observers were warning of their very rapid rise in interest rates and how that would affect the banking stocks. We saw, especially with Equity Bank, we saw them change how they're reporting the securities held for trading. So we're beginning to see even the banking stocks really take a hit from the core economic performance of the broader scale of the market. So the question is, will this fantastic half-one-year results be sustained into the rest of the year? And there are some doubts about that. So I think that for now it would be well advised to give it a hold or a wait-and-see approach.
Now we are seeing in today's session boosts for Total and Kenyan Market. Total up just over 3%, Kenyan Market up 2.18%. And I think it's really a function of rising energy prices internationally and rising demand domestically. But I mean, the irony is that whilst the oil marketers are doing really well, the consumer is pinched at the pocket. So for how long can that situation continue? Because we've heard in Kenya, in the last month, they introduced price caps. Is that what authorities are going to do going forward?
The energy play is a very, very tricky one. Just looking at those particular stocks individually, Total has generally, for the longest time, been very, very stable. And it's a surprise that we're seeing it rising in this kind of scenario. So Total aside, Kenyan Market is really a regional play across all over Africa. So the direct Kenyan effect is kind of muted in that they are able to really have the rest of the group perform very, very well. We've seen them shift a lot of base now into Tanzania, and that's really is expected to have a favorable impact on their books. So the energy stocks, yes, the energy companies, even globally, have really been performing very well at the expense of the consumer. The global consumer has, for the longest time, been crying foul against the large petroleum prices, especially. So I think that this situation may continue in the short term. But the question really is, in my mind, how much longer can we sustain these price caps? We saw it initially happen in the energy sector, and now we're seeing a lot of push for that happening in other sectors across the Kenyan economy. So the capitalist in me will really wonder if this is a free market economy.
Okay, and finally, let's talk about the agro stocks, because we saw very good Q2 results coming out of companies like Sasini. For instance, we're hearing that tea prices looking a bit better, output looking good, and so we should be expecting great results. They should be benefiting also from a weaker shilling. But I mean, there is that pervasive issue of the drought and whether or not these agro stocks are going to be stellar performers going forward.
Yes, the drought issue really has come back to bite the agricultural players. Looking at Sasini in particular, the tea prices are very good. The output is reasonably high, but the concern of the drought impact, which now is being seen across the Horn of Africa, we're really beginning to get worried. And for the global investor looking into investing into the Eastern African region, this is really going to be a very, very big issue of concern. But that aside, Sasini has been a very good player, so has Rea Vipingo, and so has Kakuzi. Their performance generally has been favorable, at least in terms of the output, and they really stand to gain in terms of the weaker shilling versus the stronger US dollar. Though looking far away in the US, the bigger question in the global investor's mind is, will the US default? And that is really the question out there. So however that plays, we will then begin to see the repercussions of that even on our local stock markets.
Okay, finally, look into your crystal ball and tell us how Kenya will be affected if indeed come 2nd of August there is no bipartisan agreement and there is a default on the part of the United States. What bearing is that going to have on Kenya? Because Kenya seems to be very vulnerable to events in Europe, both market conditions, you know, if there's a volcano or any such thing, and also sovereign debt issues, because you do trade a lot with Europe and you do need a lot of euros in circulation.
Yes, the impact will actually be very dire for our economy here. The truth of the matter is that the Kenyan economy is the regional hub for the Eastern African region. So Kenya would be hardest hit in the region if the size and the repercussions of the US and European issues really come to play. So Kenya will be quite drastically hit come 2nd of August if things don't go too well across the Atlantic. And one of the things that I fear for is that the Kenya shilling will once again take a huge battering, however the play turns out to be.